40 points. Vaibhav Sanghavi, CEO at ESK Hedge Solutions, is now joining in. Vaibhav, is this the December Santa Claus rally that we're seeing?
No, of course, Rima. I think what we've seen in the last 2 months on back of relentless kind of FPI selling. First, it was realignment towards China. And probably in November, I think what we saw is basically flow kind of moving towards US from different jurisdictions or different geographies. Now, as we say, I think we've seen FPI flow getting kind of abated. And as we end towards, or as we near towards December end, is when we generally see FPI activity kind of, decreasing. Which, in all likelihood, my sense is basically we are starting to look at the consolidation phase and probably some move higher. And in probably January, we will be looking at anticipation of union budget as well. So all in all, I think the next 2 to 3 months would be interesting, provided that the FPI flow is the way it is in terms of the selling kind of over, and probably will look to kind of invest in a gradual manner.
Okay. Vaibhav, hi. So the next big event that we're walking towards is the RBI policy, right? And it's become very eventful now with this whole GDP print and talk of a CRR cut. But anyway, tell us, I mean, what are you doing? Financials, large banks, NBFCs, gold financiers. There's just a lot that's happened in the last couple of weeks.
Absolutely true, Surbi. I think a lot of stuff happening, beneath this sector. And if you see the last quarter trends, there are pockets where there is some amount of stress visible, like an MFI or probably personal loans. There are segments where people are doing extremely well, in terms of large private banks, along with the financial services as well. So very diverse sector in that sense. And for a long short fund, I think it is an apt opportunity for us to kind of play within the sector on both the sides as well. So we do like private banks, select private banks, who has very relatively lower exposure on MFIs and personal loans. And to financial services is something which we continue to like as well. So those are the segments we'll continue to be positive on. And tactically, I mean, if we do see some amount of action from RBI, over the weekend or next week, my sense is basically we will see that NBFCs, can play a shorter term bounce going from here onwards. Of course, if nothing happens, then you might retrace that as well. So that is how we are looking at this.
All right, Vaibhav, just hold that thought. I want to ask you about the IT space. I recall earlier this year, I think you were a little bit bullish on that sector, but just hold on to that thought. Granules now, it's a temporary freeze. It's down close to 10%, I think. So I think it's a temporary freeze that's played out there. It's down close to 10%. And a couple of other names actually from the pharma space, Strides, that was down close to 3.5%. That suddenly moved into the green. So you'll have to just, check this out a little bit more. But Strides, I recall from the lows of the day, it's seen a sharp recovery on that one. So Strides Pharma comes up for you on the screen as well. Big uptick is what we've seen in the last few minutes. Hi, Vaibhav. Good afternoon. Good to see you in. That call on IT, it's moved perfectly according to the plan, I think. So earlier this year, you all were bullish on IT. How well placed right now? Because the street believes everything is good for tech. Earnings are going to outpace what the Nifty is going to do in the coming year. Worst is in the price. Spending is going to pick up on services, not on equipment, which will benefit the Indian IT companies. Are you in that camp, even post this big rally that we've seen? And Trump, obviously, they believe is good for tech.
No, of course. I think there are, various variables actually getting in favor in that sense. One, of course, we're seeing some amount of currency depreciation starting to happen. Two, I think the whole generative AI, space or fears which were there earlier is now actually translating into a good opportunity for all the top kind of players who are kind of starting to adapt pretty quickly. And in addition to that, I mean, if Trump comes and kind of reduces their corporate tax, there is obviously going to be some more spend, lined up later on. And lastly, from a channel check perspective, we do see very initial signs of discretionary spend coming back as well. So all in all, in a markets where in the last quarter we have seen disappointment in terms of the results, in terms of revenue and profit numbers, here is a sector I think which is within the whole segment is looking up, from forward demand perspective, while the margins kind of being maintained as well. So this is a sector which we are keen on and look to buy on dips, at every dips, from here onwards as well.
What's the call now on tobacco and tobacco-related companies now? There is fear because of this, the GST proposal that's come through about raising the tax slab. Would you avoid it? Would you go short?
No, rather than entering the realms of speculations here, I think, let's wait for what comes out if there is anything. And then later on probably take a call. But all in all, from a staples perspective, as if you see, we have seen considerable pressure on the demand side in the last quarter, and probably also some amount of unorganized competition coming back, post the GST, post the COVID period, which actually kind of had dwindled. So, probably we'll pay more attention to that rather than this. So let's see how the coming quarter goes about, and some commentary, whether the commentary kind of improves from the from the companies with respect to the demand.
Okay, so yeah, demand continues to be a concern, I suppose. So, Vaibhav, round it up for us. I mean, now if I ask you about a strategy, say for the next 6 months, as we're rounding up the year as well, you mentioned some areas like banking, IT. What gets top billing in your portfolios, and what is it that you're going to stay light on?
See, I think to be stayed light on essentially would have to come from the global side. Any sectors, like metals, mining, commodities, other sectors which we are kind of avoiding. Also from a PSU basket, which are non-reform oriented sectors, but more on cyclical side, are the ones we are, avoiding as well. Lastly, from the banks which have continued to be higher exposure in terms of the MFI or stressed segments, are something which we are probably avoiding as well, from a portfolio standpoint. And from a market standpoint, I think while the next 3 months are likely to be very eventful, purely because, of course, I think as we will see union budget expectations, quarterly numbers coming from January, a lot is going to happen. Lot many variables are likely to shape up going forward. With the underlying fact that on an overall basis, the economy has weakened, and probably the earnings also are likely to continue to remain weak. So too many cross variables, but essentially good for long short in that sense.
Okay, all right. Vaibhav, we thank you for joining in and filling us in with your quick take on markets, individual stocks and sectors as well. Looking forward to chatting up with you in the coming weeks. Otherwise, we see you straight in 2025. Well, by the way, just a quick point on granules. In the